From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, this is the COB and I'm Danny Akuye with
Juliet Sarli. Good afternoon and a pretty good day coming through. I think we should see, you probably got the ASX, but we should see it above 7,000 on the close.
Look, it is above 7,000 at the moment. ASX 200 up just over 17 points or 0.25% at 7,012 points. Ooh, break open the champagne.
Indeed, and 0.4% gain there on the CBO 200 index, of course, as we're heading into the match off today. But there was quite a few themes around today, wasn't there? Because we had that China data, we had the oil slump, and Xero.
Yeah, exactly. I love Xero, not zero to hero. And just seeing how that share price closed. Look, it's down 13%.
Ooh.
So $15. That's a really big hit.
Yes.
Off the back of those results, they weren't. On first glance, on first blush, they weren't too bad, but
It's the guidance, wasn't it? Yeah.
Yeah, guidance, and also I think they're having the subscriber growth over in the UK is weaker than expected. I think Canada was also weaker than expected, so really quite challenging to grow a company's offshore businesses at a time when interest rates are going up, lots of competition, and clearly it's on a very, very big multiple, so it needs to justify those earnings. So unfortunately, Xero didn't go to hero
Today.
No, not today.
And once again, some concerns about China. We were waiting for the CPI and PPI, and we did see a decrease in the core price index. But of course, the factory inflation, so the PPI, remaining in that deflationary territory for a 13th month in a row. So just giving us more concerns about the strength of the overall global economy when you do have the world's second largest economy with those deflationary pressures. And talking about big economies, we're looking ahead to the biggest, and Jay Powell speaking.
Yeah, Powell is poised, but do we know what he's poised to say? I guess that's what we're all going to be looking for.
We're poised, maybe.
Yeah, exactly. Poised to see whether or not he comes out with a hawkish tone or not. Clearly, markets continue to remain on edge about what central banks are going to do. So bond markets, particularly over in the US, I mean, that 10-year yield, last time I checked, it was back down to 4.5%.
Oh yeah,
so
how's your inverter going that you always show us? How we, with the inversion of the US 2s and 10s?
Okay, so the US 10-year is actually 4.48, whereas look at the 2-year is
5.42.
Yeah, exactly. I must admit I haven't focused on the inversion so much, but it's certainly looking that way at the moment, which of course is always a harbinger of potential economic slowdown. But maybe we should check in with a couple of sectors and see how they traded today. And we should have the energy stocks coming up. They were a little bit mixed when I last looked. So there we go. Woodside off by 1.5%, but Viva and Ampol were positive. So really not too bad given the fact we've seen such great weakness in the oil price.
Yeah. Looking at tech, I mean, we mentioned Xero there, and that's certainly the laggard in that space, but having a look at some of the other players, WiseTech there down by 2%. Block was actually higher along with Technology One, and Altium up by 1/3%.
And let's have a look at the financials and see how they were tracking, because NAB reported today, and although we haven't been discussing that till the cows come home, hopefully we have the banks coming up any times. Yes?
All right, no banks.
Okay.
I'll tell you, I've got my iris open here. The banks were pretty mixed actually. CBA up 1.5%, ANZ up 1%, Westpac down 2%, it traded ex-div, and NAB was off 0.7%. And of course, Danny, NAB was one of our top corporate stories as well. A more challenging environment ahead, they really pointed to there. Orica, another stock in focus today.
Yeah, Orica actually, I was checking, that was actually trading up off the back of their results, as we can see, up 2.8%. And I must admit I haven't caught across that one. Xero we've been talking about, and it looks as though Zip, which also is looking to improve its cash flows and move to profitability in 2024. Market obviously putting a little bit of a thumbs down to that one. But let's move on to the stock of the day, which of course was Xero, and on the call we had Grady Wolf from Bell Direct and Howard Coleman from Team Invest.
as for Xero to hold at this level, because the company is a very strong company. They do have a high growth outlook in the US market, and they're really aggressively attacking that over the coming years, and they have said that today in their report. So we like that outlook for the US and the growth opportunity there, but at this level, given it was an earnings miss, naturally the market was punishing it today.
This whole concept of free money, which enabled absurd non-businesses that don't make profits to have market caps that were in the stratosphere, that's come to an end. And effectively, Xero is certainly a better company than those two companies, but to be at a market cap of somewhere around 17 billion or 16 billion now after the drop today is still crazy. So no, we Team Invest members would look at this and say it makes no sense.
All right, makes no sense. Well, let's get his thoughts. Fraser McLeod from Shaw and Partners, welcome to the COB. Your thoughts on that big slump that we saw coming through from Xero and whether or not it is a zero or a hero?
Yeah, thank you. Cheers for having me on. Look, Xero, very poor day for Xero, but everyone who uses Xero loves Xero in Australia anyway. And obviously, they are trying to go overseas. They are trying to go quite aggressively. I think what we need to reflect on is that Xero as a platform is an accounting software platform for sole traders and very small businesses. So even if you're a large, medium-sized business, you're probably not using Xero. What is coming through is maybe a reflection on the level of bankruptcies between for small businesses that are coming through, and that from the result today we can interpret. The average revenue per user was still growing by about 6% when the market was really looking for maybe 9 or 10, and that's really why there was disappointment. So it's more against expectations. Are things really that bad at Xero? Probably not. There's maybe a bit of sucking and blowing for the US strategy, trying to save on costs, but still go for huge growth. And you can't look at the stock and think purely it was trading on such a high price because rates were low. Obviously that does have an impact on valuation, but it's trading on about 8 times forward sales, and it's probably, if you compare it on peers, then it's trading on say about 20% revenue or 20% growth, compounding growth effectively. It's probably worth an awful lot more into the future. I think you would say that it would trade on a higher price in the future. As to when that would happen, well, you're really looking for a turnaround. I think that for a stock today, I think that would I be pickling that idea? Yeah, probably so. So would I be buying the stock today? Certainly not. Would I wish to hold it in the future? Yeah, I would, but maybe not quite yet. So I think market just had big expectations beforehand. Market's disappointed, and market in no mood at all to be able to put up with even a small challenge around growth that translates into everyone running for the door. So maybe a bit unfair. I'd pickle that idea.
Fraser, just before we get on to Car Group, seems to me they've got a really challenging macro backdrop for the expansion at the moment. It's hard for Aussie companies to expand at the best of times. There literally is a graveyard of Aussie companies that have tried, but not that the product is bad or anything like that, but you just hit the nail on the head with those bankruptcies in the SMEs, and you do have that, those tailwinds. That just as a casual observer, I'd say, might be something that could hold the stock back.
Yes, look, I think you're right. It's a difficult environment. So what we would look at is what are we seeing through? So Xero's on the front line, and what are we seeing from that result? Not just in Xero's business, but Xero is a platform that caters for these very small to medium-sized enterprises. That Xero was seen as being the cost-saving solution. It is promoted that it's going to be able to provide you with more hours that you can then spend on your business and generate more revenue, and that's the case. But why are they not taking up more? Why is there not a higher revenue per user? And so what does seem to be coming in is truly a bit of pressure, especially in the UK, and to some extent in the US as well. Australia still seems to be surviving as a growth engine for Xero, but countries like the UK really starting to suffer.
All right, we just showed the car sales, share price a little bit ahead of the game, but just talk us through your thoughts there. It's changed its name, it's now Car Group.
Look, hard to be able to if you're buying or selling or valuing if you're buying, selling or valuing a car, this is the business to use in Australia. They're so far out in front, and in many other countries as well. Very strong chart. There's nothing that's bumping that chart over the past year. It's had a tremendous run over the past 12 months. They've got this trader interactive segment business, which is more geared towards dealers, and they've added 67 dealers, I think, who are using the trader interactive business. That was just between September and October. So yeah, it's certainly, that car is firing on all cylinders. Very strong. It's probably, I think what today is maybe trading 29. It's probably another 10% in it. So as a techie style business that is an Australian story, one to be still holding on to. You can still play the momentum in it, and it's hard to say that situation would change anytime soon. So if you are, it does trade on about 21 times forward enterprise value against the EBITDA, but that's not. You can find other businesses that are trading on more expensive valuations than that. So it's continues as is, and motoring along.
I love it, motoring along. Let's go to South32, which of course is suffering from the travails of weaker metal prices, weaker sort of commodity prices. But I like your thing, South32, pickle it, growth is coming. The question is when? When, Fraser?
Yeah, we've all been waiting a while for South32. Whilst you would maybe pickle the idea of getting into Xero, you would pickle the thought of selling South32. So it's been pretty mixed so far on South32. There are quite a few negatives. The negatives really obviously are that for the commodities. So South32 is aluminium, alumina, copper, silver, coals, nickel, lead. The theory is that South32 really should be the one of the main beneficiaries of decarbonisation, but that isn't truly washing through in the South32 share price. And why is that? Well, a lot of these commodities are actually trading on much lower prices. Part of the challenge with that is inventories. Even if inventories are high or low, the cost of carrying these inventories is significantly higher for traders or for South32, and that's down to interest rates a lot higher now than they were, say, 18 months ago. The stock should be worth an awful lot more, and I think if you're holding it within your portfolio, you've got to continue to hold on to it. Chart looks a bit ugly, and it has a bit of a pop today, which is nice to see. But one to certainly pickle if it is within your portfolio.
Okay.
Let's not touch it.
Fantastic, Fraser. Thank you so much for joining us this afternoon.
Good old pleasure. Thank you. Good afternoon.
All right, Fraser McLeod from Shaw and Partners. Let's have a quick look at the leaders and laggards as we round out the session. The market has closed now. So looking at those market leaders of the day. Imugene again.
I know, like this thing is now on a complete and utter tear. And NRW Holdings, Core Lithium, South32, all up around the 3% level. And of course, we were just discussing, weren't we? South 32.
Yeah, and Orica, it rose to a 3-week high after a profit surge, so up 2.8% on the close. Looking at the laggards as well, so the stocks that went down during the session, Xero we've been talking about. And you know, it really was, Danny, is focused in on this sector in tech as well. So BrainChip dragged down. Helios was an interesting one because it got a broker downgrade. I don't want to say, but I think it might have been Macquarie, but we'll have to check on that.
Cool.
Basically concerned about some of the other healthcare companies. The Medicare data is not showing sort of positivity for its bottom line too. And then in the resources space, Xero and Chalice under pressure.
And let's have a look at the small caps and see what was going on there. Highfield Resources up almost 13%, Xanadu Mines almost up 12%. And down at the bottom, Pan Continental Energy up almost 7%. And let's have a look at some of the small cap laggards. Amira International of 14, Theta Gold Mines, never heard of that, down 14%. And what else have we got? BrainChip obviously in there, and Next Science down 12%. Okay, let's check in and see what is happening overnight.
Well, Jay Powell, speaking of course, is going to be the key. We were discussing that earlier. You've also got the initial jobless claims data, so another sort of another pulse check on the overall economy, and then some big numbers coming through as well. Win Resorts, Novavax and Oatly.
Okay, there we go. And let's have a look at the day ahead tomorrow, because of course it is a happy Friday. So that statement, RBA statement on monetary policy, I'm sure that will be heavily scrutinised by all the economists. Also New Zealand manufacturing PMIs for October, and into the afternoon when the UK opens, UK industrial production for September and the UK trade balance for September, and the US University of Michigan consumer sentiment, the initial one for November, which will be interesting to see, to say the least.
All right, and of course we do have our big event coming through too. We'll just get to that before we ad-lib the markets before the end of the show, but registration's now open for our next virtual investor event. Small Caps Big Ideas back for 2023. It will be bigger, better and faster.
Absolutely, and if you weren't a subscriber in previous years, we bring together 10 of Australia's leading small cap fund managers to each present one high conviction idea. And this year we're throwing in a fast and furious special edition of The Call featuring microcaps chosen by you.
You can register to watch live or on demand at ausbiz.co/smallcaps23. That is ausbiz.co/smallcaps23. And the ASX 200, Danny, I think did close above 7,000.
Yeah, it did. Up almost 20 points, 19.5 points, or 0.28%, 7,014.90. And we might see if we can grab the SIBO 200, which is probably unchanged. But nevertheless, quick look at the odds. There we go. SIBO up almost 0.4%, 5 points. Aussie dollar, a little bit firmer, up 0.2% at 64.14. And a quick check to see what the futures are doing for any of you that are getting interested in what is happening potentially in the US tonight. And we have a bit of a mixed picture with the Dow in positive territory, but NASDAQ, S&P indicating slightly down, and the Russell Mini slightly up. Well, Jules, there we go.
Thursday done
Thursday
and
gone.
dusted.
Absolutely.
Back for Friday.
Absolutely. So check out all those great chats and interviews. Did you have some good interviews today?
I did. I had some really good interviews. It's hard to put your mind back.
Which ones were they?
But yeah, that's putting me on the spot. No, David Franklin I really liked. He had some really interesting small lithium players that he was looking at. You know, Azure Minerals, is it going to be the next walking down Liontown Lane?
I like that.
Yeah, that was actually the Motley Crue.
Motley Fool.
And then I really liked the big picture chat today as well with Deutsche Bank, Phil O'Donoghue. We just talked many things. You can catch that online as well.
Fantastic. Okay, well that is it for us today, but have a great night, and we'll be back bright and early on the Happy Friday tomorrow, 9:30.
See you then.